Mortgage rates will fall to 4.5% in 2023.
What?
What's up, party people? Jono and Holly here with the Selling North Dallas real estate team. Hope you're doing well. We got a lot to cover today. For starters, what's the current status of the North Dallas real estate market? What are interest rates doing right now, and where are they projected to be in the very near future, according to Fannie Mae or the Fed, if you like? Number three, where are all these freaking people moving to from? Number three, where are all these freaking people moving from to get to North Dallas? Number four, the best North Dallas suburbs that need to be on your radar. And as always, how you can be prepared for what's happening here in the North Dallas market. Holly, are we ready to rock?
We are ready to roll.
All right, Holly, first of all, what the heck does inbound migration even mean? And why do people in North Dallas care about that?
Yeah, so this is a trend we've seen for years. We saw it a lot more over the past 2 years, but we have a ton of inbound traffic moving to North Texas, meaning from other states, from out of town. You can see by this graph here at the bottom, right? All the people from the different states moving into North Texas. The question is why? I think there's a lot of different reasons, right? Texas is pretty well known as a more conservative state. That's a good reason for a lot of people. I would say the biggest reason, we're seeing a ton of large industry, large headquarters making their move to North Texas due to tax incentives, right? Texas has done a really good job of incentivizing large companies and large headquarters to make the move to Texas. And so we're seeing a lot of those, obviously, employees move along with companies. So that's been a big driver for the last several years.
Yeah, it seems like everywhere I look, there's commercial development going up, mixed use, large retail, and that can kind of speak to one could make a very strong argument for if businesses are putting a lot of money into either moving to an area or developing commercial infrastructure that will provoke appreciation on the residential side. I mean, we've seen that over the last couple of years, but that trend seems to be increasing now.
So here's the thing: we hear a lot about Frisco, Plano, Dallas, Austin, right? All the big cities or larger areas that are getting some of these headquarters. What we have not talked a lot about is we have some what we would call small towns north of Dallas that are getting large manufacturing plants. For example, on that almost Oklahoma border, Sherman-Denison area, which most people in the world have never heard of, we're getting 3 large manufacturing plants, Texas Instruments being one of them. And that's going to bring a ton of jobs, a ton of infrastructure. So it brings what I'm telling our clients that are looking for investments or thinking about investing in North Texas real estate. We got to buy up to the north border right now, because that's where our equity growth is really projected to go. So we have a lot of opportunity in North Texas for different reasons in different parts of North Texas. But that North Texas little circle we've always kind of called the Metroplex is expanding, and now we're expanding almost to the Oklahoma border.
Yeah, that's a really good point, especially on the small multifamily front.
Yep.
Okay, that's a really good point. Holly, we talk a lot about the Selling North Dallas Real Estate Market Update tool, and I just did a search for Sherman, Texas, and we can see some of the markers here. So, gang, if you don't have access to this tool, you're missing out. If you're actively looking to buy or sell real estate, really anywhere in the country, drop down in the description. There's a link. You can get this tool and do a search for it. Holly, you just mentioned the Sherman-Denison market. It's interesting to me how this gas gauge here is almost creeped over into the buyer's market, which kind of speaks to what you just said. A lot of people don't know about the massive commercial growth that's happening in that area.
Yeah, it's a long game, right? Investing in real estate is not generally that short, quick turnover. I think we talked about this last week a little bit, but this is a long game. So if I know today, as I'm pushing into a buyer's market, that in 5 years I'm going to have 3 manufacturing plants in Sherman, I probably am going to generate some decent equity over that next 5 to 7 years as that infrastructure and growth and the need for employment in that market becomes stronger.
Yeah, that's absolutely right. There's so many flavors of investing in real estate on the short-term side, things like wholesaling, flips, wholesaling. Those are short-term investment exit strategies. What we're talking about here, as Holly mentioned, is the long-term strategies, holding property, whether they be single family, multifamily, large multifamily. And I would submit to you a less risky option. So if you're new to investing in real estate or you're not quite sure where to get started, that's something else that we do a lot of work with these investors. If they've got capital that they're looking to place, depending upon how active you want to be in the investing game, might dictate which of those exit strategies we look at. But when you see things like this, you're getting primed for a buying opportunity. It's just something to be aware of.
Yeah, and I know we're not focusing on a specific city in this video, but my bigger point to having this conversation is, man, if you're looking in that North Texas market, you've got to be educated about the entire market, not one city, not one school district. So really having somebody guide you through that information is imperative, because it's very specific information that you wouldn't have access to as a general consumer, especially buying from out of state or moving from out of state.
Yeah, no, that's a really good point. All right, Holly, should we talk about interest rates next?
Man, it's what everybody wants to talk about all day, every day. Let's do it.
So this article that CNBC put out, mortgage rates will fall to 4.5% in 2023. Here's the estimate from Fannie Mae, and here's what that means for home buyers. Holly, what are your thoughts?
I love this article. It's the best news we've heard in a few months on mortgage rates, right? You know, one of the things I'd like to say about it is none of us have a crystal ball. Obviously, we say this all the time, but the Fed has a pretty good idea what interest rates are going to do. And if they're telling us they're going to rise to 7% before the end of the year, which they've done, and they're telling us they're going to drop in 2023, we can expect that they have a better idea of what's going to happen with those rates than the general consumer. And I think that's great news. Something we get wrapped up in interest rates as home buyers. And I asked one of my clients this week, talking about interest rates, right? It stresses people out. It freaks people out. It increases your payment based on what you were going to get if you paid at 4, 5, 6% interest, right? If you're having to pay 7% interest. So what I've presented to some of my own clients is, what's the interest rate on your car loan? Do you know? Most people don't know the interest rate on their car loan. Do you know why we don't know? Because we go to the dealership, we look at our monthly payment, and we say, can we afford it? Do I care that much what my interest rate is? The answer is no. We're looking at affordability. So if we can afford the payment, right? Like nobody's excited about 7% interest, but if we can afford the payment today and we can refi in 2023 down to 4.5% potentially, now we're putting money in our pocket during that refi process, right? So this is it's a mindset. If I can afford the payment and I can start building equity and I can potentially put myself in a better position as interest rates decrease and I can refinance, that's a whole different process. Investors don't really care what interest rates are as long as they're meeting their criteria of, cash flow or making a minimum payment or whatever their specific criteria is. And I think as homeowners, we should be looking at that a little bit in a similar way. It shouldn't keep us from home ownership because this number freaks us out. If we can afford that payment and we can potentially put ourselves in a better position as the rates fall, we're still winning. We're building equity. We own our own home. We're not paying somebody else's mortgage, right? Blah, blah, blah. But it's a little bit of a mindset shift.
Yeah, that's a really good point. I was looking at some numbers on a property that we dispositioned in July that we bought we'll just call it 5 years ago. And it was a single family property in Frisco. And we were cash flowing about $500 a month. When we got into that property, we weren't necessarily focused on cash flow. We were focused on, I don't want it to cost me money each month. If something breaks, I don't want to have to take money out of my pocket. I want that asset to bring cash to me. And over the course of 5 years, we had $169,000 in gross revenue realized when we sold the property from where we bought it to where we sold it. And because of the cash flow, we had deferred maintenance covered. So when the stove broke, we just took it out of that checking account and we never had to take money out of pocket, which I think speaks to your point. It is a metric. The interest rate is a metric. It doesn't mean do it or don't do it. It's just one of the things that we want to be paying attention to, especially if you've never bought real estate. Who are you getting your advice from? Are you getting advice, as Dave Ramsey says, from your broke Uncle Joe, who doesn't own real estate? If it's something that you're worried about, that's why you have wise counsel.
Like a wise council of elders.
So looking at this right now, so this is where rates are today. As always, we'll put a link to mortgagenewsdaily.com in the description. This is a great website just to keep an eye on, especially if you're in the market. 30-year fix is at 7.15. Holly, according to this article, the Fed's going to be dropping to the fours in 2023. Now, is that a guarantee?
Absolutely not.
Absolutely not.
We're only guaranteed to have to pay taxes and die. Eventually, we are not guaranteed anything in real estate.
So that kind of speaks to having just a stable financial household. If it's going to break the bank for you to afford a house and there's no cash reserves to fall back on, if things don't turn out the way that you thought they were going to, then you're kind of on shaky ground. And maybe that means we hit the brake pedal until we can get some of these other factors in line. There's just a lot to consider when buying a house beyond just what the interest rate is. So something else that I don't think it's a lot of attention, but it's starting to get more and more attention, is these ARM products. Talk to us about what an ARM is.
Basically, an ARM is a short-term interest rate, maybe for 5 years. At the end of that 5 years, your loan comes due, and there's this giant balloon payment of $500,000, whatever your loan is. That freaks people out because they're like, gosh, obviously I cannot pay $500,000 in 5 years. So what this is structured to do is get you into the property at a slightly lower interest rate, makes your payments a little bit more palatable. And when those interest rates do start to drop, they drop below the 6.75, for example, right? It's a good time to say, okay, it's dropped to 5, it's dropped to 4, 4.5. That's when we want to refinance. And we refinance out of that balloon payment. We go back to a traditional 30-year mortgage at a much lower interest rate. No $500,000 balloon payments, freaking us out in 5 years. So we basically restructure that loan at some point through the process.
Yeah, that's right. So in some cases there are balloons, in some cases there aren't. Like there's so many flavors that can come in. So ARM stands for adjustable rate mortgage. So in the case of the 5-1 ARM, what's going to happen is, in this case, let's say you're at 6.75% for 5 years. And then at the 5th year, there's, as Holly mentioned, there's either a balloon payment, which that would be disclosed on the front side, or the rate jumps to whatever the current rate is at that time. If it's lower, it jumps down. If it's higher, it jumps up. In some cases, there are parameters on how much it can jump. So a lot of people in the 2007, 2008 subprime lending bust, what ended up happening is a lot of people had adjustable rate mortgages, and they were able to get into these really nice homes for a really low payment. And they didn't pay attention to the fact that it was adjustable. So this kind of goes back to the point of wise counsel. Part of a home buying process is you want to make sure that you understand what your lending options are, and all mortgage lenders are not created equal. God loves all his children, but it's imperative that you have a mortgage advisor that can properly explain what does an ARM mean in this particular case for you, and then keeping an eye on that as we progress through the file to make sure that you're on top of things and you don't just turn a blind eye and then all of a sudden your monthly payment skyrockets and you're in the wind.
Yeah, absolutely. And, you and I have touched on it a couple of times in the last several weeks, that we do have an opportunity in this market right now where for 2 years, our appraisal gap was the opposite direction. We were paying more for properties than they were appraising at. That's what was happening for 2 years due to supply and demand. We've flipped that script now as we came out of the pandemic and everything's kind of started to shift, where we have higher appraisals than we have list and purchase prices in a lot of cases. So we're able to actually buy down this 7.15% rate because we can roll it into the mortgage and it becomes a much lower hit on your bottom line, right? I can get an extra $20,000 in my loan paid out over 30 years is not a big deal, but we buy down that interest rate, 1-2% interest, and it's a significant impact to the monthly payment. It's about being educated, not about being fearful of the market. There's always a market to buy and sell real estate. Individual motivations, needs, goals are always going to play into that, but being educated will just help you make a much better decision.
Education is an important thing.
It is indeed most important for everyone.
Yeah, you're absolutely right. And what I would add to that is buying it right. I would submit to you, Holly's an active real estate investor, as am I. One of the massive keys I think that gets overlooked in real estate is buying it right. And that transcends what the market is doing. In up markets, in down markets, buyers markets, sellers markets, it all depends on what you buy it for. And if you buy something at a massive discount because of the tools at your exposure, you have a lot more grace to that. If you don't know what you're doing, your first deal can be your last deal. So you want to make sure that you're informed, and that's what we're trying to do here, is make sure that folks are informed.
Yeah.
So guys, is this stuff helpful? Before we go any further, this is the point where we say, hit the like button, hit the subscribe button, turn on notifications so that you're alerted anytime new content drops. And as a token of our appreciation, here's a clip of Holly breakdancing in her bikini. You're welcome. I love that clip. That's so great.
It is so good.
All right. So we talked a little bit about inbound migration. Where are these people moving from? LA is at the top of the list. 3% of home buyers searched to move to Dallas, Texas from outside of metro areas. This is another reason why what's going on in Dallas can be so profitable for people that are thinking about buying. According to Move Buddha, these are some of the more popular cities that people are looking to relocate to. Dallas being number 10 on a national list. Let's see. Inside of Dallas, we've talked a ton about Frisco. So Spacewise says that Frisco's in the top 5 best suburbs within Dallas.
Did you say suburbs?
Suburbs. Listen, not only do you not have to be real smart to be a real estate agent, you don't even need to know how to speak English. It's awesome. In terms of Frisco, in terms of Dallas suburbs that you're seeing, any data or feeling with the buyers that you're working with on location?
It's a very personal decision. Some people move for commutes to a new company or a new job, or maybe they're being relocated. Some people move specifically for a school district. Some people move because they want land. All of those things can drop you in a different specific location. The great thing about North Texas is we have a very large variety of locations that are still convenient to what we would call everywhere, right? I can get to DFW Airport, I can get to Love Field, I can get to Fort Worth. I can be almost anywhere I need to be in the DFW Metroplex in about an hour. But that gives us a lot of opportunity for people to say, hey, I want to move to Dallas. Where do I want to move? It's like saying, hey, I'm going to order a Coke, but I really want a Dr. Pepper or a Sprite, right? For people who aren't from Texas, we call everything a Coke. So we call everything Dallas, or we call everything Fort Worth. And really that means we have a bunch of suburbs, each one having their own specific niche and qualities and cool features, and really just having somebody locally guide and be a resource to be able to answer those questions. We recently had clients looking to move in from Kentucky, and they don't know what the job's going to be. They know what the industry is going to be. They don't know, what the schools hold. They don't know anything about Texas. This was their first visit. We spent 3 days taking them to 5 or 6 different specific suburbs that feed into different school districts, have different quirks and cool things that they liked. And out of those 3 days, they nailed down 2 cities that are actually fairly different from each other and kind of far apart. But both of those cities fit their needs specifically. And after driving through and getting a feel for it, they knew what felt like home to them. And I think, a lot of it is just the process of learning what feels like home, because that's different for every person, right? They liked a lot of trees and a little more rolling hills, and I don't mind the big flat 2 acres that I live on because it's my flat 2 acres. So everybody has that different specific in need, and really kind of getting that guidance and education, understanding is what helps people make the decision for them, not where I think you should live, but where you're going to feel, at home.
Man, that's a really good point. We, the name of our channel is Selling North Dallas. So if you go to sellingnorthdallas.com, it actually takes you directly to the YouTube page, which you probably already know because that's probably how you found this video.
Exactly how it happened to you.
But there's a lot of different cities on here. And speaking about the specific couple that you mentioned, our job is not to try to convince someone that they need to live in North Dallas or Collin County. Our job is simply to provide the data. And they actually liked several of the cities that were outside of Collin County. And we love that. We're not here to sell an idea. This is where Holly lives. This is where I live. This is where a lot of our action is. But we cover the entire DFW Metroplex. There's properties in Fort Worth on this channel that we talked about. Investment properties that we bought, sold. Anyway, go through here, explore the videos, and if you find, if you go to playlists, there's different playlists. Like here's 2 properties that we covered in Plano. Here's 2 in Wiley. And if there's a city that is not covered that you've got questions about, throw that down in the comments, or just reach out to us. There's a Google form there. Let us know areas that have piqued your interest, and we'll happily chase those rabbits for you.
Absolutely.
So speaking of that, right here is a video that we just finished talking about 5 reasons you should move to Frisco and not Dallas. But check that out and let us know how we can help. Until next time.
Bye, Felicia.